for this Wednesday, February 12th. And there's one stock here that I want to draw your attention to here. It is Oramed Pharmaceuticals, ORMP. ORMP. All right, I think this is setting up for a good potential buy candidate here. This stock has been trending up for some time now. We've pulled down off this high, and we're trading below the 50 exponential moving average, right? The hot pink, above the 200 right here, and we're trading, and we've gotten into these gray action zones here. Look at these white bars. The white bars are telling us that the market's starting to contract. Yesterday, Tuesday, the 11th, the stock created a real tight inside pattern. So last Friday we had an inside pattern, and then Monday, all right, Monday actually this was an outside bar closing in the barely above the 50% of the range, and then today is an inside pattern. So if the market is able to break up through yesterday's high of $15.82, 10 cents to 15, and the reason I say it's a very low price stock. I mean, look at this, a $15, $16 stock. Look at the ATR on this. The average true range is $3.16. That's huge. That is a huge average true range for a stock trading between $14 and $16. So there is definite movement in this stock. And I just believe that if the market is able to penetrate up through yesterday's high of 1582 to 1592 minimum, you've got a potential big runner on your hands. So definitely pay attention to this stock. If the market gaps up through 1582, I wouldn't look to buy it. Okay, I always need to see the market trade up through highs or down through lows if I'm looking to buy or sell. Right, I need to see that steady movement. If the high is broken first, if it trades up through the high, the initial catastrophic stop should be placed directly below the low of yesterday's inside pattern. If the market is able to take out the low first and then reverse intraday and then take out the high, that would even be a more powerful scenario. So again, to recap that, if the market opens up within the range and then first trades down through the low, heck, yesterday's low, or if it takes out the last few bars low, that's fine. And then somehow reverses intraday and then takes out that high, that would be a much better trade setup, actually, if it took out the low and then took out the high. All right? So hoping that helps. Let me just show you real quick the E-mini S&Ps. Yesterday was a real strong day. I definitely didn't think the market would have rallied as fast as we have from these lows. But let me just show you a quick little pattern here. We had a huge sell-off a few days ago, if you recall, right? This low right here. Then we had an inside pattern. And then this day right here is key. This day took out this big down bar. Here, let me just give you some dates here. So on February 3rd, we had a huge down market. It was down over 317 points in the Dow, right? Remember, this is the E-mini S&P 500, right? And then the following day, we had an inside pattern. And then the next day, right here, on the 5th, the market not only took the low out of the inside pattern, but took out that big down bar by 25 cents only. Okay? That's huge, and closed up on the day. So on this day, on the 6th, when the market took out the 5th high, that was a screaming buy to go long the market. You don't see this pattern very often, but when you do see it, you need to pay attention to it. Again, market got slammed, then you got an inside pattern, then the market barely took out this low, and once the market took out that high the following day, expect the market to move up, and it did exactly that. So hope that helps. Again, keep your eyes on ORMP for a swing trade to the long side. You could either trade the options or the underlying stock. Have a great day. Be profitable. I'll talk to you tomorrow. Bye for now.